Oh, imagine I was muted. All right, so I welcome us to a new session as we make progress. And in this session, basically what we want to talk about is the candlestick patterns that I trade, chart patterns, my own view of them. And then I wrote, you don't need to know everything to make money in the industry. And then I included currency correlations. All right, so as we make progress in our last class session video, we spoke about support and resistance, how we can identify support and resistance to take trading opportunities. And I said I was going to teach us how we can then begin to maximize those technical tools, as it were, support and resistance, which is static and dynamic. Dynamic, which has to do with trend line, and static, which has to do with the support and resistance that is in a linear zone. All right, so as we make progress, I want to talk about candlestick patterns first. After that, I'll now go into how to then make sense of everything to take a trade. So this alone is one strategy on its own. And what I would like us to pay attention to as we make progress, you know what, let's just talk about that later. So the reason why I want us to talk about this now is because these candlestick patterns are also needed to be able to take a trade around your support and resistance area. So that's why we need to talk about them first before we then talk about how we can make sense of everything to then take a trade. So let us make journey. Candlestick patterns. Definitely, if you are reading through Baby Pips, as I told you to, you will definitely get to a point where we were talking about candlestick patterns, right? And around candlestick patterns, there are single candlestick patterns, there are double candlestick patterns, and there are triple candlestick patterns. However, amidst all those candlestick patterns, I as one, I only trade three, or I only focus on, did I say three? I meant to say, yeah, it's three. Don't mind me, sorry. I only trade as it were, or I only use three. Now, and that's because if you look at what I wrote down here, see, the honest truth is that in this industry, you don't need to know everything to make money. That's the honest truth. The reason why a part of us feels we need to know everything is because this is not a class for psychology. But long story short, you don't need to know everything to make money. That's the honest truth. So these are the three that I have observed over time that are profitable. Excuse me. These are the three chart patterns that I myself, I'm sure I can remember telling you to backtest the charts. So these are the candlestick patterns that when I was backtesting the charts, they boosted my confidence that, okay, when I see these chart patterns, I want to trade them. Are we together? So number one is the engulfing candle. Engulfing candle. And what does engulfing candle means? Engulfing candlestick as usual. So engulfing candlestick, as you can see here, as you also saw, I'm sure, on Baby Pips, is that an engulfing candlestick is a candlestick that completely, like the word implies, engulfs the previous candle by its side. So when you see it at the top of an uptrend or forming around the resistance, now it's making sense. Then you can be sure that there's every probability that the markets will tank. And when you see it at the bottom of a downtrend forming around a support, you can be convinced that the markets will do what? Find its way to the upside. So an engulfing candlestick is a candlestick that completely engulfs the previous candle to its left. It can appear at the top of a trend for bearish signal, and it can appear at the bottom of a trend for bullish signal. It's a reversal candlestick patterns. So let's go into the chart so I can just draw example. So let's assume that First off, let's start from here. Good. So the market has been on a downtrend, right? And then the market found support or broke structure. Remember, I taught us about break of structure. So no be all the time, be just support, support, support. So let's say the market broke structure now. Depending on the time frame you are looking at the market from, let us assume that this is a 4-hour time frame. I believe we are making sense together. So let us assume that this is a 4-hour time frame and the market breaks structure. Remember that this is giving us bearish movements, right? High, low, lower high, lower low, lower high, lower low, lower high, lower low. For no reason is price actually supposed to close above this high, but price decided to close above it and tell us that, you know what, it is time for me to begin to do what? To move to the upside. Now, the market having done that, if this break of structure happens in the form of an engulfing candle, we can trust that that break of structure is a strong one and then it will hold. But I think I'm jumping a process already. So engulfing candlestick. So let us assume that this is a what? This is a bearish candle. Don't let me stress by putting weak. And then this is a bullish what? A bullish candle. So what an engulfing candle means most times, 80% of the time, is that you now see this candle to the left, to the right, it completely engulfs. Like engulf, it covers it, the one to the left. So that's a show or sign that impulsive buyers are now entering the market. Now, most times, the bigger the engulfing candle, the more strong the signal. So meaning that this is a bearish candle that came to the downside. Let's give that red. And then this is a bullish candle that did what? That then moved to the upside. So it completely engulfs the previous one. So that is chart candlestick pattern number 1. And this is for a bullish signal. To now go for a bearish signal, because that means that the market has been coming in a downtrend. Yeah. So market got to a point, maybe a previous support region, and then the market does this. Then all we do is do what? We wait for a retracement. Remember, retracement, it has formed a new high. We wait for it to come and form higher low. Then we join it to go and create the new higher high. That is that about for bullish engulfing. So for bearish engulfing, the same thing applies to. So let's assume we've been moving to the upside, to the upside, to the upside, and then maybe markets got to a region of previous old resistance. And then the market does what? The market does like this as usual. Give us a buying candle, right? And then now give us a bearish candle that completely engulfs the previous bullish candle. Can you see that, guys? Completely engulfs it. This one is bullish, and then this one is bearish. Completely engulfs it to the downside, breaking all these structures, right? Then we can be confident that, oh, this asset has done what? Has changed its direction. And what do we want to begin to do? We want to begin to look for entries to the downside. So what we will do, as usual, we wait for the market to come and create the lower high, and then we join it to move to the downside. This is in the scenario of a normal market structure. Now, remember I told us about support and resistance. Yeah, let's just take notes. This is engulfing. This is engulfing. I'm sure you read Baby Pips, and this is more clearer now. So this is the engulfing candlestick pattern, which is chart pattern number 1 that I can trade. Number 2 is 3 inside up or down. 3 inside up or down candlestick pattern. Let's go for Baby Pips. Wait. So when you come here, okay, evening and morning star, that's the third one that I trade. So, but let's go and look for the one that brought us here. Yes, so three inside up and three inside down. When you read on baby pips, I don't want to stress drawing it again. You can see that the candlestick pattern formation has its own rule and regulation, meaning that, for example, in a, sorry, excuse me, for example, in a, what's the name? In a bullish markets, for the one that will give us a bearish signal, okay, they spoke about bullish signal first, three inside up, okay, forms as a trend reversal pattern that is found at the bottom of a downtrend or maybe a support area. So they say that for a three inside up candlestick formation to be valid, these are the properties. The first candle should be found at the bottom of a trend characterized by a long bearish candlestick. The second one should make it at least to the midpoint of the first candle. And then the third makes it to close above the first candle high. Let me just look for charts example that I can show you. There is one that I saw on a particular asset some weeks ago. Last week 75. I was not able to trade it, but okay, this is a limit I had here, but I deleted it already because market came almost to my TP and it may still hold, but that's not why we're here. Okay, so where's that point? Page 4. All right, great. So this is it. Remember, if you read the rules and regulation, the first candle must be bearish. Yes, remember the market is in an uptrend and then the market was reversing. So these are scenarios where you can use all these candlestick patterns. It doesn't necessarily have to exclusively be a downtrend. You can see these things at regions where you're expecting the markets to come and to create the higher low and join it. So, I was expecting the markets to come and create higher low. This is the first candlestick. If you remember the rule and the law, it now says that the second candle must do what? Close at least midpoint. That is where you bring your Fibonacci into play. So this is, can you see that the first candle closed above the midpoint of this one, and then the third candle closed above the high. So that tells me that around that region, the markets may most likely buy to the upside. So what was it that I did? I wait for the markets to retrace again. My entry was somewhere here. My stop loss was right below here. And the market in all its choppiness did like a 1:5. Ideally, market was meant to go here, but then it stops here, and 1:5 is also a good deal. What I'm just trying to point to us is that I was able to take this trade because of, excuse me, that candlestick pattern formation. This is another scenario, excuse me, right here. Can you see? The first one closes above midpoint. The third one closed above the high. You can see what the market did. The markets retraced, and then what happened? From there, we moved to the upside. Good. So that's that about three inside up. Same thing also applies to three inside down. Let me look for examples of three inside down. And I can't remember the last time I saw one. Okay, this is an example right here. Market formed its closed below that low and sold for a considerable period of time. Good. I want to say something, but I really just hope it does not scatter inside your head. This is also now a support region. We've been talking about candlestick, right? What kind of candlestick pattern is this? This is an engulfing. You can see that it completely engulfs the previous one. After the market forms an engulfing around the support region, what did you observe that the market did? Market retraced a bit and did what? Bounced to the upside massively. So a candlestick pattern gave us a short-term sell That same candlestick pattern gave us the long-term buy. So we've talked about engulfing. We've talked about three inside out. Look at this scenario too. Look at here. We had an engulfing, but the market did not sell. Remember, these things don't work all the time. And there are also other things you need to add to it. But the market engulfed here. This one completely engulfed the body of this one. What did you observe? From there, the market did what? Trended down. Is it making sense to you guys? So there are situations where you can use all these candlesticks, but most importantly is, since I know situations to use them, you can see how I'm just pointing your direction in them. I saw another one just now. Where is it? Okay, great. This is it right here. Can you see another? We've seen the one for bullish, right? So this is three inside down. Look at the first candle. Definitely closed below midpoint. And then this last one closed below the low. Once it did so, what happened? The market tanked to the downside. That's it, guys. That's it. That's how it works for me, mostly. And then what's the third candlestick pattern? The third candlestick pattern is morning and evening star. And then when you come to baby pips also, you also now check what is the rules and regulation. Can you see? For a bearish situation, Abi? Okay, evening star. Evening star is for a bearish signal. They say that the first candlestick must be bullish. The second one must have a small body. The third one must what? Close beyond midpoint. Now, the first thing, I don't even know whether it's the first. Either way, it's one of the things I like us to pay attention to is that, I don't know if I told you guys that you should log into Baby Pips and track your learning. This is my own 338 classes out of 364. And that was because before I came on board on Baby Pips, I was already learning somewhere. So there are some classes I did not bother to read. And there are even some classes that after I finished reading them, I did not tick that I had read them. And that's why I have 338 out of 364. So when people say it's much, and I've read this thing at least twice, but that's a digression. One of the things I like to say to us is that you see, all these candlestick patterns, they are not usually picture perfect. So what you want to understand behind it is the logic that forms the candlestick, the logic that forms it. So for example, what is the logic behind an engulfing candlestick? The logic behind an engulfing candlestick, take for example, maybe a bullish engulfing or a bearish engulfing, like this one now. This is a bearish engulfing. The logic behind it is that we've had buyers in the market all the while. But this engulfing, they're now engulfed. Look at the number of buyer candle it engulfed. 1, 2, 3, 4. Like it's closed. Oh my God, that's a mistake. Sorry. Thank you. It's closed below four solid bullish candle. You know, according to what we read, it should be 1. This one closed below 4. Do you know what this means? This means that the sellers are inside the market now with full force. So all things being equal, all you want to be looking for are selling opportunities. But for now, remember, all we are still trying to do is to do what? To identify candlestick patterns and see them on charts. So that's that about engulfing. 3 inside up, 3 inside down. So now we have morning star and then evening star. I actually don't often use this morning and evening star, but sometimes I use it. And remember that I said that these things sometimes, they don't form picture perfect. Picture perfect means that if you say you want to wait to see it on the charts, the same way maybe Baby Pips has drawn it, you will miss a lot, like a whole lot. In the sense that, I saw an example somewhere. Okay, now this is an engulfing candle right here. Actually, it is an engulfing candle. This one, when we consider body to body, these are wicks. when you consider body to body, the body of this one massively engulfed this one. And what did the market do after it engulfed it? The market retraced and, gave us a discount entry. We'll still talk about premium and discounts later when we are talking about another strategy. And, the market just did its thing. Now, part of the rules that maybe you may find on baby pips is that baby pips may say, or anybody may say that before an engulfing candle is engulfing, it has to engulf the previous candle, both with wick and body. Do you understand what I just said? Remember that this particular candle, now me just give am this week, this week will long come down like this. Now me give am that week no dey there before. Make I delete am. Can you see it? So they will say that it must engulf both the wick, meaning that the wick of this candlestick should come below this one too, and also go above this eye. But fact is that when you consider the wick, this one did not come below here. And that's because sometimes you see that wick sometimes are just fluke. That's not where the price is. Let me now look for a correct engulfing candle that, engulfed both wick and body, and it worked. Good. Take a look at this scenario now. Can you see this one? That he engulfed this one completely. It engulfed this white candle, what? It engulfed it completely. Both the wick to the high and the body to the bottom. But what we are saying is that if you say you now want to wait for only this type in this place before you took a trade, where's that place? The place don't scatter from high. This is another example here, but let's just take it slow and steady. See another engulfing. Okay, this is our point. If you say you wanted to wait, let's remove the artificial wick we gave it. If you say you wanted to wait for it to say that, oh yeah, the wick should come below here and then it should engulf it massively. Look at all the massive move to the upside that you've missed. Am I making sense, guys? I believe I am making sense. So as we make progress, we've identified engulfing 3 inside out. 3 inside up and 3 inside down. So for the evening star, the rules and regulation of that one also is that there will first be an uptrending candle to give us a bearish signal, then a tiny bodied one, then an engulfing candle that closes below 50% of the previous candle or the first candle. So in this scenario, this is an example of an evening star, or is it morning star? Either one. Coco is getting the logic of the thing. This is a small bodied one. This one engulfs it and closes even above the previous one. So those are the 3 candlesticks I trade. Now, to make it clearer, to avoid the confusion that I once had when I was in the market. Because the moment you hear that, okay, engulfing works, one of the things you now want to be doing is to be looking for engulfing everywhere, anywhere. Anywhere you now see engulfing, you want to take it. No, you chop loss, plenty stone. So it is this candlestick pattern that I've now understood that I now carry and add to the idea of support and resistance, like I taught you. Is it making sense now? So take, for example, now, this is a support. Why is it a support? Market go here the first time, bounced off. Go here the second time, bounced off. Go here the third time, still bounced off, and went further high to give us a higher high. As market has created higher high, what will we be waiting for? To come and create higher low so we can move. So markets got to this support. Remember, I now spoke about confirmation. That what are the things that you can now know and use that we say that can put the probability in your favor. So one of them is this candlestick pattern. So look at it. Markets got to a region of support. and then gave us an engulfing candle. So that's two signals. We have a support, we have an engulfing candle. So what do you then do? Ideally, baby pips will not say you should enter immediately after that candlestick closes, which is not bad. And your TP should be at this high, but either ways, the market gave you 1:2.3. The fact is, you can't be so sure that the market will get to all these places. So let's be realistic with our approach. So the market gave 1.216. However, for someone like me, I would wait for a retracement, maybe, you know. But the thing about someone like me who will now wait for a retracement is that the market may not come back to give me a retracement. That's the honest truth. So you can see that market got to a region of what? A region of support. What do I do? I enter immediately. The engulfing shows up. And what happens? I joined the move to the upside. Is it making sense? So that's how you conjoin candlestick pattern with the idea of support and resistance. So let us now look for further examples as we make progress. Oh, I didn't spot the example of what's the name? The example of evening star and morning star. I'm not sure if I spotted enough of it. I'm not sure if I spotted enough of it. Zuzuzuzuzuzu. Zuzuzuzuzuzu. I really can't see so much of it yet. Uh, I can't see so much of it yet. But at least I want to look for one or two and show you so that you also now be able to identify them. This is an example of three inside out. You can see that this one does not have a small body as it were. It still has a small body. And what did this one be? Close below the slope. What do we do? Baby people say you enter immediately. Of course, you can see that in my own case now that I said I'll be waiting for retracement. You can see that the market did not retrace, although it retraced in the future, but not almost immediately. And then the market did what? Gave everybody a nice ride. But let us look for what we are looking for: an evening star and then a morning star. Take a look at this now. This is another example of three inside up. First candle, third candle closes above all this massively, massively. Three inside up. Why three inside up? Quite difficult to see like this. And I said three inside up, evening star. Or maybe it's because of the time frame I'm looking at. I'm seeing this one here, but I don't want to use it. But either ways, can you see? Market was coming down. So, the baby pips said that you will see these signals at the top of an uptrend or at the bottom of the downtrend. So one logic I want you to let it come to your mind is, take, for example, this is a market that was giving us bullish signals. You see these retracements on a lower time frame is a downtrend. So if you are seeing this candlestick pattern here, it is still a downtrend. Downtrend does not exclusively mean, you just come down and then you now see the pattern at the bottom here, and then you now take it and go. No. Yes, this is a downtrend, but that's not exclusively. Example two, if a chart is in an uptrending situation, I'm saying that this move down on a lower time frame is a downtrend. So when at this region, you see the candlestick form, you see candles form that candlestick formation pattern, you can be almost confident that something will happen at that region to join the price to go where? To the upside. Are we together? Is it making sense? I believe it is. So as we make progress, I want us to now begin to look for opportunities in charts, because the fact is that there's a checklist for all these things. You don't just use them on their own. You don't just go inside the chart and say that, they have taught me candlestick pattern. Let me go and look for candlestick pattern and be taking trades anyhow. You will lose your account anyhow. I believe I'm making sense to us, yeah? So let us go to currency pair. I gave us some examples on USD, JPY some time ago. And then let us check the things that happened around the trend line regions. Is 15 minutes. Let's check for 1 hour. On what time frame was that? Oh, beautiful. Thank God it's still there. Great. Great, 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 great. This is great. This is making sense. So take a look at this. This is the trend line. Drawn it. So let's assume that all we had was this first two touch. When the market is approaching a trend line, how do I know that I can take a trade from that trend line in confidence? Now, this is what we are talking about, confirmation. Remember that earlier, I spoke about the fact that, oh, okay, I can just set my limits here. That's good. But sometimes I just prefer to wait for confirmation to be very conservative. Are we together? So in this situation now, can you see that the market tapped on this trend line? And in addition, what did the market give us? The market gave us a bullish engulfing candle on a 1 hour time frame. This candlestick, this white one, can you see that it completely engulfs this? Week to week, it went both lower than it and above, body to body to it closed above it. So that boosts my confidence a little that this is market has gotten to a dynamic support region and market has given me a bullish reversal candlestick pattern. So in that situation, what do I do? As usual, what does Baby Pips advise? Baby Pips advise that you enter immediately, right? But for me, I'll wait for, a little bit of retracement. Will the market always retrace as we saw? No. So my CP will be at this high and, that's like a 1:3.3. And that's beautiful. And we just go like that. So look at the third one again too now. Now, so to now show you that it is not every time you just take candlestick pattern anyhow. Look at this candlestick pattern here. Can you see that this looks like 3 inside down? Go and check the properties. You see that this looks like it. Imagine because it looks like it, and I'll say I want to sell. I will end up in a loss. Why? Because we follow the trend. The trend is an uptrend. The market has created a higher high, now coming to create an higher low. Is it making sense? Remember I said we wait for it to come and create the higher low and then join it to go and create the new higher high. And for a bearish market, we wait for it to come and create the lower high and join it to go and do what? To create the lower low. And is that making sense now? So price came to a support region, gave us an engulfing, and we went. So let us check again. Can you see that in the future, price still came, closer again. This time around, it now gave us this 3 inside up. And if you had entered immediately, of course, you would have made profits. But as usual, I will wait for a little bit of retracement. And then, my stop loss just below that low. And as you can see, what did the market do again? The market delivered another 1:3.5. Why? Why did this pattern hold here for buy and it did not hold here for sell? Because the trend is an uptrend. So you follow the trend. So the truth is that if you see a bearish signal reversal candlestick pattern in a market that is uptrend, it will work. Now, the reason why this engulfing worked here, because this one now engulfed this one. In fact, it engulfed all the candles here. The reason why it worked for a sell is because market has gotten to a point of invisible resistance. Remember that when the market goes to create the higher high, it must still come back to create the higher low. But the truth is, in an uptrending market, you never really can tell when the market wants to start coming down. Because it can form this engulfing the same way it formed it here as another three inside down, wetin dem dey call am. So imagine you took this one as a loss, but if you took this one as a profit, yeah, there are times you can do that, but you don't want to concern yourself with that now. For now, you just want to follow the trend. Because what you are trying to jump on by catching counter trend trade, you may burn your accounts. And when you burn your account, trust me, it will affect your psychology. And once your psychology is affected, like I said, so are you seeing how we are combining candlestick patterns now with what I taught you about support and resistance, which is why I said earlier that what is going to happen, I said I will teach you how to use confirmations to now enter. We have done for USD JPY. Let's still look if we can see more examples before we go. Okay, so this is another trend line, right? We have the first touch here. Second slight touch here. So it is after now we can now consider it into the future. And in the future, what happened? Look at this one. These are candlesticks that are formed during news. Very crazy. Formed that engulfing. Apparently, you can't enter here except you want to enjoy yourself. Because your stop loss, you have to be here. So when will you even make 1:1? When will you make 1:2? It's not worth it. So meaning that in this situation, if you are someone who don't really like to wait for confirmation and you just put your, actually, when you look at the first touch, actually, the market gave us a confirmation. Can you see it? Remember this candlestick pattern, 3 inside up. Remember I said if you want it to form the way it is forming on baby pips, you miss. But this is the first candle. It closes above midpoint. The second one closes above this one's open price, but did not close above the high. Maybe that's why they still came back to take this low. But if for any reason you entered or wait for a retracement, as I do, or as I often do, and maybe you say you want to put your stop loss below the trend line very well, you never can tell. You don't know when they will go beyond level. So this is like a 1:8. But would I have been able to get in on this trade? No. Why? Because I love confirmations a lot. When you check my charts, take for example this one, I just love confirmations a lot, at least. Thank God. On the WhatsApp group, if you're on the WhatsApp group, today's date is January 17. I dropped 2 signals. One to sell VIX 75 and then one to sell VIX 10. Let's see what happened. So let's just check what happened here together. Wow, awesome. Awesome. I could have gotten from here too. And the market is currently doing well. But today, I said I am not trading. Let's check how VIX 10 is doing. All right. As you can see, VIX 10 is currently going to the downside. I feel happy. No money, shouldn't I? Let me go and look for where I screenshotted both of them. How do I do this? Okay, so this is my WhatsApp. This is where I talk to myself. So can you see this is the VIX 10? Ideally, I could have ended. So can you see? This is perfect. This is an engulfing. Can you see it? Can you see that I could have entered immediately, like they teach? But I just like confirmation. For VIX 75 too, can you see this is the engulfing? This is the engulfing. Let me go and show you on the charts. This is for VIX 10, currently moving in our direction. This is 1:5. If it hits TP, 1:5 is backed. And for VIX 75, I feel excited, don't mind me. And then for VIX 75, yeah, so this is that engulfing. I was waiting for confirmation, but looking at what the market was doing right over here, I knew it was going to clear off all this side. So I just like to wait for confirmation. You get. So there are days that you wait for confirmation, like this one now, you can see that the market did not come back immediately. If the market had came back, had become back either ways immediately, then this one too might have given me that one ratio or that one ratio 4. But as you can see, the market did not do it. So what happened? It's cleared out, right? And that's it. I'm rescued from a loss. So I just like to wait for confirmation once in a while. And that's because it just saves some stress. Yeah. So let us continue with our lesson though. Don't let us get distracted. So that is how to use candlestick patterns with support. Let us now look for areas to use it with what? With resistance, which can be static or dynamic. Let us look for other assets. Let us look for other assets. This GU has been misbehaving for some days now. I've been fighting with the guy. That's why I've been trading more of synthetic. So while the GU chart is loading up, I just want to check something. That about that. It is here. Smooth. Not bad. All right, so the market is right over here. And let us zoom out to see what we've got. So this is a significant high. No, this high right here. Beautiful. So if we connect it to this, good. So there is what we call fake outs. And confirmation is one of the ways you can avoid fake outs on the charts. So now let's look at this together. You know, this is the third touch, right? Over here. Good. And what did the market give to us eventually? The market gave us, look at how market broke above it. So some people would have wanted to do what? Enter for a retest here, which in itself is not bad either. But as you can see, the market broke back inside the trend line, giving us saying a 3 inside down now. This is the first bullish candle. In fact, this one actually engulfed this one. Can you see it? But it did not come inside the trend line. This one now came inside it massively. So if you wait for a little bit of retracement, like I used to do, your stop loss right above that high, and you see how the market delivered massively. Like, ideally, this should be your take profit. That's like 1:6. So fact is that, guys, you are not here to trade the market every day. But having learned one or two things, you want to trade only what you know. So let us look for how. Remember that I now taught us how to join a trend that is currently in move. When I was showing us examples of areas that, this area, for example, the fact that price bounced here makes this place a support. And when price breaks it, there's every possibility that place can become a resistance. So that's it. The market draws a zone over there. And what happens? Combining candlestick pattern. Let me change the color of this. 2, 1, 2, 3, 4, 5, 6. I really hope it is making sense. Good. So this is a support region that was broken the moment we had a close. This red candle closed below that low, below all those zones. So that makes it a what? That makes it a support that can become a resistance. So how do we know? Can you see that the market retraced back to that area? And what did the market do? Market gave us a bearish engulfing. Of course, the market still went further down. And what do they call this one? They call it doji. But I mostly don't use doji alone. I would prefer to wait for another confirmation below it. So if for any reason you entered here after that engulfing forms, and maybe you put your stop loss above the resistance, the support now turned resistance, yeah, you made some cool money, right? But maybe for someone like me now, that yes, I wait for retracements for some while. Same me too, my stop loss above that region. Can you see? I made more. Can you? I'm showing you different setups now. So this is a one-time support became resistance, isn't it? And then this point also, this is another one-time support that eventually became a resistance, but the market did not tap into it so much. It tapped into it firstly here, but no candlestick pattern. Then tapped into it the second time, and then give us this massively engulfing candle. Would I have entered here? Apparently no. But look at what happened. This is a new support here. This region, a new support. What did the market do around that place? Let us watch to see again. Can you see what the market did? Tapped into all of that and gave us a what? A bearish engulfing. This one. So like me now, if you had waited for retracements, that the market should come back up a bit, you can see that the market did not give us that retrace. It was in the future, and that didn't last long. But if you had entered immediately without waiting for confirmation, your stop loss right above that high, the market delivered for you 1 ratio 3.8 instantly. So this is how to make sense of everything that I've taught you so far to make a trade. But let me now compact it and make it easier. That what are the regions I want to look for candlestick patterns to then take a trade? Regions of support and resistance. And how do I mean support and resistance? Number one, when I'm buying and market is retracing, I only want to wait for the market to retrace and then join it to move to the upside. Let's do this. Sorry. Let's do this way. So I only want to join the markets to go and create the new words, the new higher low and the new higher high and the new lower low. So meaning that it is in areas of these points where the market has come to create the higher low that I want to look for bullish signal candlestick patterns. Do you get? Only in those regions. So how do I know where markets will retrace to? And because it can form a bullish pattern here, does that mean I should take it? It can form here. Does that mean I should take it? Well, the answer is sometimes yes, sometimes no. So how do you know when to take it, when not to take it? That's in another lesson. But another way to just add confirmation like we did is then your trend line. Is it making sense? That's for an uptrend. Same thing if we inverse the charts for a downtrend. Same thing applies. You get the idea? Market has come, created the lower low. You want to follow it to create the lower high. And then around that region, if you can connect a trend line, spot a candlestick trading pattern, just fine. Will it always end up in profits? The fact is no. The fact is what? No. But that is why we try to wait for confirmation most times, so that it can help us reduce the probability of losses. So this is pathway number one. So pathway number two is now that, remember I taught us that this is a market creating higher highs, right? That the market can come and stop at this one-time resistance and use it as a support to create its higher low and then continue moving up. And which is what I showed you in the case of all these cells over here, right? This is for sell. Opposite of it is for buys. So can you see how we are following the trend back to back? Because we are in a downtrend. There's no reason to look for buying opportunities inside the selling market. No reason. No matter how enticing it may look. So in this situation too now, what happens? So I can mark out regions like this and then check what price is now doing when price gets there. That, okay, when price gets here, did it form a candlestick pattern that I can maximize? If yes, and let me take advantage of it. This is for a buy, right? I've showed us for sales. Let's look for opportunities of buys and sells. I'm using these assets a lot because that is what I've been trading mostly. So let us go and look for opportunities. So take a look at, so this is a support that ought to, so this one did not turn resistance. You see, so can you see why it's good to wait for confirmation? Imagine I just said it's a broken support, supposed to turn resistance, and I just put skinny there. Can you see how I would have taken beautiful, beautiful loss? Like a very beautiful loss. So let me look for, this is a very beautiful one. So this is a support region that supported price to go up. Markets came down and broke it. Can you see what happened over here? Let's first mark out that zone. Why is it that we are actually mostly seeing selling opportunities? So can you see that around this zone now, this is actually pretty inside waiting the column now down. But if you are taking it, maybe with your stop loss right above that, this one would have taken you out. But what do you observe about this one too? This one too was actually an engulfing. It engulfed this white one completely. So if you had sold immediately from there, the moment it's closed, your stop loss right above that high, the market gave you some 1 ratio 1.9 before eventually coming back, which in itself is not bad. But I want us to look for buying opportunities or buying scenarios, buying scenarios, buying scenarios, buying scenarios, buying scenarios. So in all these cases, you realize the market came back deep for the retracement. So no be saying all the time. You just mark that place out and look at what price is doing around that place. I believe I'm making sense. Great. I'm not seeing much opportunity for a buy markets. Not so much. Not so much. Not so much. Maybe because the asset itself has actually been selling mostly. But let me still see if I can get before we then wrap up this session. Because that's it. That's how to make sense of everything to take a trade. So it is now your duty to now come and sit down with the charts and then be looking for opportunity. We just have mostly sells, support, turn resistance, support, turn resistance. Are you seeing it? We have one here, but I'm not too bad one. One of the things about this market is you don't want to force a trade. No, you don't want to do so. Also, this is a beautiful place. So this is a resistance. Markets broke above it. And then we mark out that zone. Can you see how it turned support? So how would we have traded it? Market got into it. What did the market do? Market gave us this engulfing. This one engulfed this. If I had waited for retracement as usual, retracement stop loss right below that low. And see that this one came so close, but God rescued us. 1 ratio 3.5, full and sleek. So that's how to make sense of everything to take a trade, guys. Let us go back to where we started from. I think we started with zero card. Yeah. And even I spotted this. I didn't take it though. If I took it, I would have dropped the signal. It is only these ones that I've dropped that I took. And this guy, I'm suspecting he still wants to continue the sell. He just came to clear as what we call internal liquidity. So there are things I will look for around this region that would make me conclude that most likely this market still want to buy. So can you see now that this is a what? This is a resistance zone. Can you see? That is why I was looking for that first sell. Is it making sense? I was just looking for confirmation. And what was the confirmation? So just to let you see that there's no fluke here. The first time, second time, third time. So the market came, this one now engulfed this one. So actually, if I had entered from here, I would have made some money and be out of the market. But of course, as I've shown you again and again, Olanrewaju, we always wait for confirmation, which the market didn't give you. So the market has come back now to that zone. Of course, can I just set my limit there? In fact, let's just set it that maybe at that point, you can see the market is reacting already. My stop loss slightly above those. Let me take this one out. Let me take this one out too. Right? And where might TPB, of course, right at this low. Let's watch. But just that for Olanrewaju wants to wait for confirmation. Confirmation boosts the confidence. Confirmation doesn't mean it will go your way. Several confirmation like this one today, this one that I just took off. For those that are on the platform, in the midnight, if you can remember, I dropped a buy signal. The market did close to just 1:2. That's after confirmation. And what happened? Market still took the stop loss. And as you can see, I was trying to scout for buying opportunities back. Is it making sense? So confirmation does not mean it will go your way all the time. Confirmation only means that the stake, the probability is increased. Is it making sense? So like this one now, this one is dancing around this region. I don't know why it's doing this one, but it is well. What was the confirmation? A bullish engulfing. I wait for retracements. Now we are just expecting the market to come down. But either ways, we watch. So that will be all for this session, guys. That is how to make sense of everything to take a trade using structure and candlestick pattern. Oh, lastly, I want to let us talk about currency correlations. And what are currency correlations? Currency correlations simply just mean that, oops, no, 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 no. Currency correlation simply just means that there are some assets that are correlated in the sense that they move together in the same direction. It may not be at the same pace, but in the same direction. I'm saying that so that as a newbie, when you are on the charts, you not make that mistake, because some of us make those mistakes, and you must have seen Baby Pips also talk about it if you read Baby Pips to the end. So example of correlating assets is GBP USD and Euro USD. Let me show you something. So this is the Euro USD charts. Excuse me. And let's now, there's a way you can add a chart. So let's add GBP USD charts on Euro USD. Good. Can you see that they are almost moving together? There are two charts here. One of them is GU, one of them is EU. The one with red and white is EU, and the one with green and red is GU. So can you see that they are mostly moving together? Can you see? Like mostly moving together. So if you add GU and EU on your watch list, like I did here, the fact that I have the two of them here does not mean I'm trading the two of them. And the fact that I have the two of them here does not mean I can't trade the two of them. But imagine a situation whereby you are buying GU, you are selling EU. And imagine a situation whereby you are also buying GU, buying EU. You are exposing that account to the same risk. Because fact is that if GU hits SL, EU too will hit SL. So mostly, I don't trade correlating assets. I just pick one of them and stick to it. So another example of correlating assets is GBP USD, GBP JPY and Euro JPY. Let's check it out. So we have, this is GBP JPY at the back. Let's now add Euro JPY on top. Can you see again? Almost the same. When GBP JPY is buying, Euro JPY is buying. When GBP JPY is selling, Euro JPY is selling. So imagine you did not know. You just add both of them on your watch lists. And you now see a buying signal on GJ. You also saw a buying signal on EJ. You now bought the two. Fact is, if GJ is stop loss, EJ too is stop loss. So that's you exposing yourself to two risks. Okay, you may want to be cunning and now say that if that's the case, I'll buy GJ and sell EJ. One we make profit, one we end the loss. Well, if you can carve a strategy around that, fine. But the market is not that simple. So one of the ways that you can easily just know correlating assets to avoid them is you can go to myfxbook.com. I've always been going there. So my FX book, you come there. When you come to my FX book, can you see correlation here? You click on correlations, and then these are the assets. You can change whatever assets. You can filter the assets, like any assets you want to see or you don't want to see. You can filter it from here. And then this is where you can now come. You now say that I want to see assets that their correlation are lower than, thank God I came here because I forgot. There are also now assets that are inversely correlated. These ones that I just showed us are positively correlated. What that means is that when one is buying, the other one too is buying for positive correlation. But for inverse correlation, when one is selling, the other one is buying. So imagine a situation whereby let us look for assets with correlation less than 80%. Great. AUD card, Euro AUD. Let's check that on the charts. AUD card. We have AUD card here. Let's hide this. And then let's look for Euro AUD. New price scale. Banking. Oh, what kind of broker is this? There's no Euro AUD aside EU AUD. Oh, crypto. Sorry. Euro AUD. New price scale. Great. When you look at it very well, can you see that when one is selling, when one is buying, one is selling, and when one is buying, the other is selling. What this simply means also is that imagine you now have AUD card and Euro AUD on your charts, and then you are buying one and buying the other one too. Definitely one will hit stop loss, one will hit TP, and sometimes both may even hit stop loss. So the idea behind it is that even if you trade all these assets, number one is trade them independently. And number two is just pick maximum of 3, 4. You are okay. So GBP, USD, USD, JPY, AUD card. Just pick assets that are not so correlated and you are good. I'm saying so because people make that mistake a lot as newbies. I've done so. So you see a situation whereby maybe you see a buy on GU, you take it. You see a buy on EU, you also want to take it. And then maybe both end up in profits. Of course, if they go in your direction. And then when they don't, both end up in loss. And then you are most likely disappointed. So we've come to the end of this segment, guys. Go into your charts. I've taught you the candlestick reversal patterns that I use, just those 3. When I spot them around areas of support and resistance, or resistance stone support or support stone resistance, I act. I've shown you live chart examples already. I act. So this one is behaving like a witch. But remember, like we said, not be all the time. Way markets give confirmation will still go your way. And it may still go my way because in the midnight, for those on the group, if you can remember, I dropped a trade for this same volatility 10. Let's check. Where is it? This is it. This same volatility 10. Using that same strategy. This is a support. It got broken. I saw an engulfing. You can see my entry after a tiny retracement, isn't it? Let's go back to the charts. I hid that. So can you see? So I already made 1:3 from this asset in the midnight already. It even went as far as, 1:5, but I closed at 1:3. That's enough for me. You get the idea? So that's it, guys. This one gave confirmation, engulfing, retracement, boom. Engulfing, retracement, same thing. But will it go? It looks like it's going. So let's wait until we see. I want to see if it has done maybe 1:1 already, which I believe it has. It has done 1:1. but I doubt if it have done 1:2. No, not yet. Because the moment it does 1:3, I'll drag my stop loss to break even. It doesn't make sense that my trade has done 1:3, and because I'm waiting for 1:5, the trades end up in a loss eventually. So finally, chart patterns. And what are chart patterns? Chart patterns are these channels, rising bar, wedges, all those things. Friends, when I started trading, I was trying to memorize all those things too. But as I keep growing in the industry, I realized that you don't need to know everything. Trust me. You can pay attention to it and it works for you. Please, I'm not trying to discourage you. What I'm trying to say is that for me, I realized that I didn't have to know everything to be profitable. And sometimes the chart pattern work, sometimes they don't, of course. That's the essence of probability in trading. Because take, for example, now, I think this is a channel here. That's a channel over there. And what's the rule of channel? Okay, this looks like a bullish flag. Markets continue to the upside. As you can see, market actually rather continued to the what? To the downside. And can we have situation where we have bullish, bearish flag? Okay, in this situation, we had what looks like a bearish flag here, and markets continue to go down. So it works, provided you can, but for me, it's like too much things. I'm entering the chart, I'm either looking for wedge or this or that. There are people that know how to identify it fast. If you can, good for you. Me, I stuck with what I can identify fast, and it's working for me. So that'll be the end of this session, guys. I've taught you technical analysis, support and resistance, market structure, how to make sense of everything with candlestick pattern. Go into the charts and begin to practice. After demo practicing for like a month, let's see, put in some real life money and let's make progress. So that will be all for the part one, because this is one strategy. There's another strategy I then trade, which is called smart money, which I would also still teach and release the video. So, but stay with this one first. What smart money will just do for you is that smart money will now let everything I've taught you now make more sense. Like it will add more confidence to it. So that will be all for this session, guys. Digest these sessions until you understand them. And I will see you at the other side. Cheers and God bless.